The fiscal cliff was one of the issues behind Wednesday's Wall Street sell-off. The Dow Jones Industrials lost 313 points. It was the worst day of the year. The index fell below 13,000 for the first time in 2 months. Rebecca Jarvis is watching the countdown to the fiscal cliff for us. Rebecca, good morning.
Good morning. And this is becoming like debt ceiling debate 2.0 right now. The clock is ticking. Investors are looking ahead to what a possible package of tax increases and spending cuts could mean to the economic recovery.
If you total up all of the things that will happen on January 1st, all the tax increases, all the spending cuts, everything, it actually totals up to $728 billion in calendar year 2013.
The numbers are staggering. The average American family will pay between $2,000 and $3,000 in additional taxes. 1,200 government programs will see cuts, and unemployment is expected to climb back above 9%.
I think it's very, very likely we suffer a very deep recession, and I don't think that's the way we want to go here.
The fiscal cliff is as much about politics as it is about economics.
As a member of the Budget Committee, I've worked with and met with other senators, Democrats and Republicans, to try and figure out some path forward. But bluntly, our challenge is leadership.
Democratic Senator Chris Coons of Delaware has been working on the issue for more than a year.
Why would anything be different now after an election where pretty much everything has remained the same?
That's exactly the core question, is why should the markets believe? Why should families believe? Because we have to, because we don't have a choice.
The alternative means more turbulence.
Until investors and business people can construct a clear narrative with respect to how President Obama and the House Republicans are going to nail this thing down, there's going to be a lot of uncertainty, a lot of fear, and we're not going anywhere.
I'm sure it's going to be messier and harder than I would like. That's the nature of a real compromise, is that everybody ends up unhappy.
Does everyone believe that it will be the catastrophe that is projected?
Yes and no. Yes, in that right now businesses hate the uncertainty. So does the stock market. And so that catastrophe scenario, as much as it might not be an Armageddon one, we are in this recovery right now. It's very fragile. Businesses are stalling at this very moment in time. I hear from CEOs every day. Senator Coons hears from them every day in his district, in his state. Every single day that this decision doesn't get made, a business doesn't know how to plan for the future. That weighs on stocks, that weighs on how people pay for our debt in this country, and it weighs on companies and the decisions to employ more people.
It's not just the spending cuts that are part of this, but also tax increases, not just for individuals, but what about businesses?
Businesses will see the increases as well, and there's a demand problem because when you see an increase in taxes as an individual, all of a sudden you're not spending on things. Unfortunately, we're at a demand scenario in this country where demand has been very much weakened by the recovery. The more that taxes, for example, are taken out of pocket, they can't go towards things that would ultimately create jobs for Americans.
John Boehner drew a line yesterday, no tax increases for small businesses. Very interesting. Thank you, Rebecca.